Good afternoon, everyone. I've got 20 minutes. It normally takes me about an hour and a half to warm up when I do a talk. So I'll do my best to try and be as concise as I can. I'm David Paul. I have a checkered history, that's for sure. I've got a degree in engineering. I have an MSc in metallurgy and a PhD in mathematics, all of which I may add is totally and utterly useless in becoming consistently winning as a trader. Those of you that are well qualified may have worked that out on your own. Without a doubt, the thing that I've done that stood me in best stead in markets is in my youth, I was an officer in the Royal Marines. And that's given me a level of confidence and discipline that I've drawn upon for a very, very long time. And I can still fit into the uniform 42 years later. You would have got weak at the knees, girl, if you'd seen me in uniform, okay? Okay, you would not have been able to control yourself. I've been trading since October 1982. I put on my first trade in South African breweries in October 1982. I was living in Johannesburg at the time. My family is still in Johannesburg. I traded on my own for a very long time. I went to an investment meeting one evening, and it was a group probably about this size, and the speaker got laryngitis. So I was coaxed up to take the meeting. And it went well, and at that meeting, there was a stockbroker there, and the stockbroker came and said, will you come and teach my young traders how to go about being consistently successful in the market? And that led to a second career in coaching traders, and I've coached traders all over the world, in stocks, in Forex, and in indices. I've even coached my own son, believe it or not, who's got a degree in music, left university with a degree in music. Clearly, there were employers beating on the door. So he was lying at home doing nothing, and he got used to watch me trade. I taught him how to trade, and he's now a very successful portfolio manager in South Africa. He's 25 today. I'm missing his birthday party. So I was in London, working with my good friend and trading partner, Tom Hogarth. Some of you may have tripped over Tom Hogarth over the years. I took a 5-week trial for VectorVest UK. I was so impressed with it that I got onto a plane to North Carolina and I secured the agency for South Africa, largely because I needed a business for my son, the same unemployed music graduate. We built VectorVest South Africa up into quite a large organization, and 2 or 3 years ago, VectorVest asked me to do the same thing with VectorVest in the UK, which commercially wasn't doing that well. It hadn't been actually pushed out into the marketplace that well, and that's what I've been doing. So what does VectorVest do? Well, folks, there's 3 legs in the VectorVest product. One, we put a value to every single share on the London stock market every day, so that you can see at a glance whether your share is undervalued or overvalued by the market. And as a default, we favor shares that are trading below their VectorVest valuation. There is less risk there. So we favor shares that are rising, and we want to buy those shares when the general market is rising. And VectorVest puts a number to value, they put a number to the trend of the share, and they put a number to the trend of the general market. And when all 3 things are saying yes, we can simply make a better decision and put the probabilities of success at our back. Now, the whole process can be turned on its head if you want to short the market. Who likes to take a bet that the market's going to fall? Anybody? Okay. Well, you can turn the whole thing on its head. You want to find the shares with the worst fundamentals that are falling when the general market is falling, if you've got the stomach to sell something that you haven't got. Okay. I've done a 3-day seminar on futures once upon a time. At the end, an old fella come up to me and he said, how can you sell something you haven't got? Okay, so the futures market is another step. So I haven't got VectorVest running here. I can't do that at this format. It's running down in our stand downstairs, and we're more than happy to show it the detail of the product to everybody that's interested. I'm going to go through the key metrics now. So we are pretty much the only organization that sells investment software and education in the country that's FCA authorized. And I'm not allowed to give one-on-one financial advice, and that's our disclaimer. The VectorVest system itself, what's the share really worth? How safe is it? And some idea about the trend. And I would like you to write this down in your little notebook. The only way to make money in anything is to find the value of something and then pay less for it. I don't care what you're in, whether you're in used cars, whether you're in property. But at VectorVest, we put a value to every share in the market, and we advise that you get involved in shares that are trading significantly below the VectorVest valuation. So we look at the safety of the earnings stream, and we look at the trend itself. So let's go through the VectorVest parameters. Our first and most important metric is called relative value, and it drives the share price. So you need to think now for the next 2 minutes. Are you all good for that? Are you all there? Okay, here's what we do. We project the earnings of every share in the market. We project those earnings for the next 3 years. That's our best shot at it. Mark Twain said so beautifully that the future's a very slippery commodity. So we project the future for the next 3 years. We make the following assumption. We assume that those earnings will be fully discounted into the price at some time over the next 3 years. Not when. They'll be discounted into the price as a function of sentiment, and sentiment is bloody difficult to forecast. The father of sentiment was a fellow called Ralph Elliott. Has anybody done battle with the Elliott wave principle? Yeah? Elliott himself says so beautifully that markets normally do what I think they're going to do, but never when. All right, so at some time in a 3-year window, we project the earnings and we assume that those earnings will be fully discounted into the price. We work out what the price will be. We take the projected price, we subtract the price yesterday, calculate the upside. We divide that upside by what a AAA rated corporate bond will pay over the next 3 years. And the resultant number is relative value. It drives the share price. If your share has got a relative value of 1.57, that's saying that we believe that that share will outperform the risk-free rate by 57%. And that's our first and most important leading indicator. So I want to buy shares, guys. The first tick of the box, I want to buy shares that are undervalued. Secondly, I want to buy shares with a high RV, a high earnings potential. That's the second tick. Third tick's coming up. The third tick is what we call relative safety. And in relative safety, we look at the fundamentals over the last 5 years. We look at the balance sheet, the income statement, the cash flow statement, sales, margins, suck them all up and munch them out into one number on a scale between 0 and 2. 1 is okay. The further above 1, the better. And VectorVest reckon that if a company's got a relative safety above 1.3, that's excellent. The relative safety, sir, that you use is a function of your stomach for risk. If you are conservative and you don't want to be wrong often, when we get old, we struggle with being wrong. Would you agree? You could roll with it easier when you were 18. Now, this is the way it is. Okay, we struggle with being wrong as you get older. Has anybody noticed that? So if you are conservative, you're going to only trade in shares with a high relative safety. If you're more aggressive and you want to find a share that goes from £2 to £12, then you've got to pull the relative safety down because the old conservative shares don't do that. Now, for example, I've ridden a little share called Victoria. It manufactures carpets. It's the biggest carpet manufacturer in the UK and in Australia. And I've ridden it from £2 to £14. We need more of those, sir. We need more of those. Kensington, Chelsea and Kensington, here I come with a few of those. But it's got a relative safety of 0.97. It's undervalued, it's got a high relative value but a low relative safety. If you've got the ability to manage risk proactively with stop-loss orders, and you can manage those orders without fear or hesitation, then you can drop the relative safety. But if you're one of those guys that when the market comes back to your stop-loss and you say, let's give it another tick, let's give it another day. Who's ever done that? Okay. Then low relative safety shares are not for you. Now, I have a vision of opening my own little fund. I've got one more FCA exam to do. Okay, and then I'll be able to actually manage your money. Okay, and if I managed your money, I would not dream of putting you into a share with a relative safety of less than 1.3. When you actually open up a new account, everybody will tell you that I understand risk. Yeah. As soon as you've got one red blotch on that monthly report, the phone will be red hot, and you'll be holding it out here, and the plastic will be melting in your hand, the guy. Everybody understands risk until you have one bad month. So if I was managing money for you, I would only go into shares with a high relative safety. When I'm managing my own money, then I'm prepared to take on more risk. So relative safety is all about you. So VectorVest is not a black box. You need to marry your investment style to the product. Where would you put your relative safety, sir? 0 to 2. Are you aggressive or are you conservative?
Conservative.
I could see from the suit. Okay. I could see from the suit. Okay. 1.25, 1.3. That's where you should be. The next number is relative timing, and we put, this is easy, we put a number to the trend. We look at the trend day over day, week over week, month over month, and we put a number to the short-term trend. That's easy. All right. Again, it's on a scale between 0 and 2. Above 1, the darn thing's going up. The further above 1, the faster it's going up. And then the master stroke. When I nearly fell off the chair when I first seen this, the inventor of VectorVest, Bartolito, put all three things together, and for the first time in my experience, he put a single number which in fact summarized the fundamental position of a company and the technical position of a company in the one darn number. And I'd never seen that before. As a default, ladies and gentlemen, all of the shares in the London stock market, the US stock market, are sorted by descending VST because that's where the winners are. Now, we have another metric for those people who want income. Who invests for income here? Okay, well, we have another one called YSG. Yield, the safety of the yield, and the growth of the yield. And you can sort your shares by YSG for income. Now, I'm 60. I know I don't look at girls, but I'm 60. And I'm looking for, you don't believe me, okay? I'm looking for capital growth, and I'm also looking for income. I want to try and get both. And I sort my shares by VST plus YSG. I want a foot in both camps. And I find that that works really well for me. So if you are after capital growth, then VST. If you're after income growth, YSG. And if you want a foot in both camps, then you can use our tool called UniSearch, where you can actually sort by a mixture and put yourself in the middle. We put a stop price to every share in the market. The stop price is based around a 65-day moving average, which is adjusted. It's adjusted for the fundamentals. If the fundamentals are good, we widen the stop loss. We give the share more wiggle room. If the fundamentals are poor, relative value and relative safety are sort of drawing in, then we tighten the stop loss. Quite sexy. We put a buy, sell, or hold to every share in the market every single day. And that can be used to time the market. It's also used to work out the breadth of the market. And we like to see a market that's rising, on good breadth, where the number of buys is increasing over the number of sells. And that's, in fact, the case over the last 3 weeks. Markets have been rising, and the buy-sell ratio has been expanding, especially in North America. So somebody's buying this market. So now, our objective so far is to find undervalued shares that are growing their earnings aggressively, relative value, that are growing their earnings safely, or at least as safe as you wish, relative safety, that are going up, relative timing. And we want to buy those, ladies and gentlemen, when the general market is rising. And timing the general market is probably 80% of the exercise. You need to know, guys, when it's time to be a lion in the market and when it's time to be a lamb in the market. Doing nothing. And that's 70% of the exercise. So we have timing systems for spread bettors who want to be in the market for a few days, a few weeks. And we have timing systems for longer term players. And the mantra is to buy rising shares in rising markets and to sell falling shares in falling markets. I'll take that one bit further. To buy rising shares with outstanding fundamentals in rising markets and to buy falling shares with awful fundamentals in falling markets. That makes sense? It's quite intuitive, I think. And we've been timing markets for 25 years, 26 years now. And there is the London market itself, and that has got a medium-term timing system on there, which tends to keep us, if the market is rising, in the market for many months at a time. It's got an acronym, a DEW market timing system, and if I had more time myself, I would show you exactly how that works. It's quite simple, it's robust, and when we get a little green triangle, that's saying that it's time to be a lion in the market. That's when you should be buying. And since the middle of February, this system has been saying that we're running up the page. And that gave a signal on the 16th of February, just after the bottom. And I've personally been in the market buying shares since the 16th of February. And if you don't believe me, just go to the blog, vectorvest.co.uk blog, and I've been writing about what I do every weekend, and it's all date stamped. So I'm trying to walk the talk, all right? Now, these red signals are the general market selling off. And I'm more than happy to admit that we had a bad signal there and a bad signal there. That was a difficult bit of trading, but that's markets. Now, when you see a red signal, one, don't buy anymore. The market's falling. The general market is falling. Yeah? When you see a red signal, that's time to watch your stop losses very carefully indeed. When you see a red signal, it's a good time to sell off some of your non-performers. Raise some cash for the next buy signal. And my favorite thing to do is to hum a little bit of Bob Marley. Don't worry about a thing. Every little thing's going to be all right. Works wonders. So, since the middle of February, VectorVest has been saying that it's been a great time to be in the market buying undervalued shares that are growing their earnings aggressively and safely. Now, I had to do this a couple of days ago for the show. At the moment, VectorVest is saying, since Thursday night, is saying that the short-term trend in the London stock market is down. And if you were a spread better, you would already be short. Who are the spread bettors here? Any? Well, if you were a spread better, you should have been short from the open on Friday morning. And you would have had a very good day yesterday. The longer-term trend is still up. And every day, that's communicated on the front page of VectorVest. And if you haven't got time when you're on the go, VectorVest is on your phone these days. So you just have to dial into the app. And there's an app for both the Samsung phone and the iPhone. It fits on iPad and whatever mobile device that you have. So at the moment, we have our first signal that the market wants to turn down. And we need to be careful. When I did this the other day, all of this was in the middle of the week. I'm not tell a lie, April the 13th. So I had to do this 2 weeks ago. The time flies. First of all, the little pointer says, VectorVest advocates buying safe undervalued stocks that are rising in price at this time. That's 2 weeks ago. And we've had a good run for the last 2 weeks. The trends are color-coded green so that you can see easily. At that date, we had 840 shares, 48 shares on a buy recommendation, 239 shares on a sell recommendation, and 1,000 going nowhere. And thus the buy-sell ratio, the breadth of the market, at a very healthy 3.55. You probably can't see this, but at that particular date, we were in an up-up situation. The short-term trend was up, and the longer-term trend was up. That's saying it's a great time to be in the market. The spread bettors should be long, who are looking only at the short-term trend, and the longer-term players should have been in the market since the middle of February. Now the short-term players are either in cash or short, and the longer-term players are riding out the noise. And as I say, it's not a black box. You have to decide where you want to be in that. Personally, in my investment portfolio, I'm following the long-term trend and I'm riding those positions up the page, and I will get out of those long-term positions when I see a red signal from our market timing system. And that's still quite a long way away. So everything is color-coded so that you can see it very easily indeed. And our mission is to provide the very, very best stock market guidance available anywhere at any price. Now, at VectorVest, we allow you to test the product for 5 weeks for £5. If it's for you, then VectorVest UK and VectorVest USA is invoiced at £39 a month. It's on a month-to-month basis. If I cannot make you money, then you simply stop it. But I'm quite confident we can. We've got lots and lots of VectorVest customers here that have very, very kindly come along to support me. It's great to see you all. We have a large customer base all over the world, and we only have a large customer base all over the world because putting the fundamental position of a share together with the technical position of the share simply pushes up your hit rate enormously. So if you're struggling to get the hit rate out of your trading that is emotionally satisfying, I assure you that if you're only right 50% of the time, being wrong 50% of the time is a pain. You get strings of bad ones. In other words, if you're wrong 50% of the time, every 8 trades you have 3 bad ones in a row. And 3 bad ones in a row is not good, okay, emotionally. Am I correct? Who's ever had 3 bad trades in a row? Okay, not good, not good. By putting the technical position, simple charting, together with the fundamental position, we can push that hit rate up till 70 to 75%, even in short-term trading, by doing some very, very simple things. Our number 1 share over the last 3 years has been JD Sports. It's been at the top of the VectorVest list, and it's gone. It's got both. It's undervalued still. It's got a high RV. It's got a high RS. And it's gone since I've been in the share. It's gone from £5 now to £12. My biggest winner is that Victoria share, but in Victoria, I've had to pull down the relative safety enormously, which I'm happy to do with my own money. But if I was investing somebody else's money, I wouldn't do that. There's just too much that can go wrong, okay? You saw the other day that an acquisition didn't go through and the share price pulled back quite a lot. I think that if you're a short-term trader, really the only thing that you need to look at is this traffic light. And you want to be buying shares when the pointer is here, and you want to be shorting shares when the pointer is there. if you're a longer term player, then you need to keep your eye on the underlying trend as well, which is this second word, and the market timing graph, which is this. And this is largely the most important chart on VectorVest. This is a chart of the entire London market. It's not the FTSE 100, it's not the FTSE 350 or 250. It's all 2,200 shares that we follow on an equally weighted basis. At VectorVest, we believe that an equally weighted index reflects the sentiment of the market much better than a market cap weighted index. So what we've tried to do is to take this information and put it on the front page of VectorVest, and when this little thing gives a green signal here, then you'll find that that second word on VectorVest will turn to up. In other words, it means that if you don't like charts, you don't have to look at the chart at all. It's actually all done for you on the front page. So if you're a long-term player, you'd be wanting to buy into the market when the pointer's in the green, but the underlying trend should be up as well. If you're a short-term player, the underlying trend doesn't matter that much. You should be going long and short with what we call the primary wave, the first word. At the moment, the shorts would be short from the open on Friday morning. Who's short in here? I've been short all Friday, yes, in my spread bet account, yes. But my pension, a longer-term portfolio, I'm still holding the longs. And I will hold the longs until I see a little red signal up here. And when I see the little red signal up there, that'll be a signal to watch my stop losses incredibly carefully. And there are 2 or 3 shares out of the 10 that I've got that have done nothing. And I'm going to get out of those fairly quickly and raise some cash for the next time it turns up. If you're small and you're just starting out, if you see one of those red signals, then just go to cash. Get out. Okay? Just get out. Simple as that. Many people trade indices. Does anybody trade indices here? Well, if you do trade indices, you'll find that you don't need to do much more than to actually follow these signals. And if you actually were to trade the FTSE 100 based on these signals, you do exceptionally well. In fact, we have a guy in Manchester who's trading treble leveraged ETFs based on that system and making a bloody fortune. Okay, he's a millionaire to start with, and he's just playing with a small amount of money, which means that emotionally, the trades are no big deal. And if the trades are no big deal, the noise associated with a treble leveraged ETF doesn't bother you. If it's your last penny, that noise would drive you to drink if you didn't need any extra motivation. Okay, folks, the young man is telling me that I'm out of time. As I say, when I do these seminars at the institutional level, I do that. It's a full week. When I do a talk for Barclays, it's a full week, and I talk from Monday morning till Friday night, and they have to stop me on Friday night. So this is quite short. If you want a demo of VectorVest, we're downstairs, stand number 78. I don't think you can miss us. And Susan and I will show you the product and answer all your questions. Thanks very much, guys. God bless. Bye now.